What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 4th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I not only want to give an important but brief update on all the madness we've been seeing in markets over the last 72 hours, Bitcoin down nearly 10%, Ethereum following behind it even more, and I want to go ahead and not only talk about, just making sense of it all, putting aside all of the FUD in the market, but also focusing in on what altcoin markets are telling us more importantly. This is where we've been really focused. And outside of that, the vast majority of the video is going to be sitting down with my good friend Alex Sanders, otherwise known by his YouTube name, Nuggets News. And we're going to be talking about DeFi, the craze going on, really trying to break down the long-term macro perspective for what DeFi can bring. So we've got lots of things to discuss right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alrighty, everyone, so let's go ahead through this brief update here before we dive into the interview. Taking a look across the board in the market, you can see there are very few exceptions in the green here. The vast majority of plays right now over the last 24 hours are in the red and double-digit territory. Now, we can see, of course, the leaders here to the downside are SushiSwap, copies of, Wire and Finance like DeFi Money, Ampleforth, Band Protocol, Rin, UMA, Balancer, Reserve Rights, all kinds of different plays here down in double-digit territory, some taking really harsh corrections off of some of the exorbitant gains that they've had over the last few weeks. And this isn't just a trend in cryptocurrency markets, this is actually a trend in broader asset markets. The NASDAQ the other day, as well as the Dow Jones and the S&P 500, had their worst day since back in early June. NASDAQ down over 5%. So I want to go ahead here, we can talk about that towards the end here, but I want to go ahead and dive in a little bit to talking about Bitcoin and Ethereum and the broader altcoin space. Now, yes, this has been a very harsh correction on Bitcoin here. Over the last week, we are down around nearly 12%, one of the worst weeks that we've had in a very long period of time here for Bitcoin. In fact, if you even take a step back here to some of our worst weeks here back in May, we only went down about 9 to 10% here. So if we do hold down these lows, this will actually be one of the worst weeks of sell-off since back in March of 2020. It's an interesting point to keep in perspective because a lot of the larger traders are looking at these time frames. They're not looking at the dailies. But taking a look at the daily, though, just to get some perspective, not a crazy amount of volume here, right? Again, you can look across the exchanges here, take a look at BLX. You'll see the volume is definitely close to where we had on July here, but nothing too substantial. The biggest thing that I want to point out here in regards to Bitcoin, because I know the vast majority of you, probably just care about Bitcoin or maybe some of the top altcoins. The key thing to keep in mind here is that one thing that we had predicted would hold didn't hold true, and that was the line that we had here on our Coinbase chart here for Bitcoin, the line of previous resistance and support. And we can see here that we had a very clear breach on that, and when we did, we had a decline through. And now the next support range would be generally somewhere around this range where we've had resistance previous times. We have to see it hold here at that big even at 10,000. That's what I'm hoping we can see. I know some people will bring up the point that we're going to fill in the CME gap, taking a look at BLX just to kind of get a broader time frame here. A lot of people think that what we're going to see is we're going to come down onto that line of previous resistance in the past, make it support, and that would be going down towards around 9,000. Is it a possibility? Yeah, it is a possibility at this point. And again, if you were to think about it here, if you're going from 12K to 9K in this case, you're talking about a nice, substantial 25% pullback. Nothing too crazy, right? We've seen it before in Bitcoin. So, again, if anything, I'm looking to average in at that point. We've already seen a good substantial amount of this pullback. Again, if anything, it's good to take profits there, the big evens like 12K if you do believe there's going to be a correction. I'm just really not trading in these kind of shorter time intervals. I'm not day trading in this case. Now, I want to mention something important, though. A lot of people got very emotional. I was seeing even some of the people in the space that I follow, some of the other content creators, other personalities in the space, saying that this was like a really brutal sell-off and it was very, very difficult to deal with. And maybe if you're in some of the speculative DeFi plays right at the top, I can understand that. But taking a look at Ethereum here, for example, compared to Bitcoin, ETH to BTC is still holding very well. It was just back here at the beginning of the month. And to put it even more in perspective and be more fair, right, we want to take a look at the dollar pair. Well, we were just back here at the end of August on the 28th. This really isn't all that bad. It's just closing down on the last final portion of the rally that we've had. So we've been going all the way up since back here in March. It really takes perspective to be rational as a trader and to kind of enjoy just how gracious cryptocurrency markets are, how lucky we are to be in this market so early on. I don't worry about this sell-off, guys. When I saw ETH at $400 yesterday, to me it was like, I remember about a week ago when it was like, 300 something, right? It was about on the upper 300 range right here, right? It doesn't scare me when ETH is hovering around $400 after going up to 480. I was happy when it was up at that range. I'm going to be happy at this range as well because I've been holding ETH and also a variety of altcoins since down here when it was 100, 200, 300. Now, I do feel for those of you who maybe bought your positions up here. I've been there before. But this again shows, in this case, you have to have the patience and focus on the long-term cycles. And I'll go ahead and just take a look here. If we go to ETH, we can do the ETH chart to Bitcoin, but just taking a look here at like Bitfinex, right? We've got a good range of price history here. We talked about this golden range that we discussed a long time ago. This is where we were buying, and we were buying when no one else wanted to buy in the market. And now ETH is building a nice higher high than when it set back here in June. This is exactly what we want to see. Now, will it come down, maybe make that new support? That's probably the worst case scenario, down to $300. I'd take that opportunity myself personally to average in. But again, it's not really where ETH goes in a couple of weeks or a month or even a quarter. It's where it's going to go in the long term. Because our objective, let's even say the worst case scenario, is for ETH to come down, bounce back up stronger than ever, and continue climbing here into 2021 and into 2022 to new all-time highs. This is our focus point, guys. We're not caring about what happens on the daily time frame or the weekly time frame. Now, last point here I want to bring up before we dive into this really awesome interview with Alex is to focus in on altcoin dominance. If you were to look across the board here at CoinMarketCap, or if you were to look at Uniswap, or wherever you're trading right now, depending on what world of crypto you're in, you'd probably be panicking right now at what's going on in altcoin markets. But the interesting reality is if you just take a look at the daily, we're right back where we were at the end of August for altcoin dominance. And if you take a look at the monthly, again, we look at the longer term trends here, we're still 5 out of 5 points on the SMS indicator. The only time we were here last was back here in July of 2017 during the flow of the bull market. We're doing fine, guys. Everything is okay. It's all right to see these red days because we've had multiple weeks of green days, and I can understand for many people it's difficult to see the red days. So whether you're a new trader here, guys, or you've been here for 3 years and you've probably heard me recite this multiple times, just know that they're the truest points you can take to mind when you're going about trading and investing in these markets. It's volatile. It's the Wild West. DeFi is just starting out. But imagine a world where DeFi is going to have hundreds of billions of dollars, if not trillions of dollars locked up. And that's what I'm about to talk about here with Alexander. So I hope you guys enjoy this interview. It's definitely one you're going to want to listen to, whether you're commuting to work or just sitting at home, eager to learn about DeFi. Listen in. You don't want to miss it. I'll talk to you guys soon and enjoy the interview. Alrighty, everyone. So yet again, we have the privilege of sitting down with one of my good friends on the other corner of the world. That's Alex Sanders from Nuggets News. Alex, thank you for making the time, man. I'm really excited to have this conversation. I think since we last talked, many people probably thought we were crazy when we were talking about DeFi like we were back a couple of months ago. And now I think it just seems DeFi is on its own turn from the crypto space. It seems like two different realities from the world of Bitcoin and Ethereum down to the actual niche things that are going on in DeFi.
Yeah. Well, I think people, now they know that we're crazy watching all these vegetables pop up every second day in the world of DeFi. But amongst it all, there's some very important things happening and pushing the boundaries of finance. And in between all that, I guess there's the the meme coins and the crazy returns. And just as we were recording this last night, we saw the rug get pulled out from some of them. So yeah, plenty to dive into today.
Absolutely, man. Yeah, so I think I want to go ahead and I guess I'll kind of start on like a broader perspective here. So we talked about DeFi, I think last probably when total, value locked up. And of course, it's not a perfect metric because some of the coins can go up in value. But I think last time we chatted, it was probably a few hundred million or around like $1 billion locked up. And now we're living in a reality where just today, I think just today over the last 24 hours, we reached 10 billion. So the industry in this case has at least on a fundamental basis of new ETH and new Bitcoin being wrapped onto the platform, at least had a 5 to 7x in the fundamental underlying value and the growth of the network. So I'm really curious, Alex, to just kind of like hear from you on a surface level view. And I think, again, there's a lot of people still just coming into DeFi. How would you go about defining it in this case? I've been talking about Kyber Network and a few of the other plays that would kind of fit in this category of DeFi, but what's like your pinnacle, like kind of description of DeFi as kind of an asset class or a portion of crypto?
Yeah, I guess I like the term open finance a little bit more because there's a lot of things that aren't decentralized yet, or it's that scale that we're working through. So, yeah, anything that opens up the world of investing to people or trading, getting loans, anything that opens up finance to people, I guess I'd describe it as. So, yeah, I definitely would categorize everything from Kyber to synthetics to some of these newer platforms. Like yesterday, we saw Realty, the guys that are tokenizing real estate. They finally partnered up with Aave, so now you can use your property as collateral. So anything like that that's opening up the world of finance to not only new customers but to new applications. I mean, it wasn't possible before to go to one of the big banks in Australia and say, "Hey, can I tokenize my property, that mortgage I've got with you, and use that as collateral for the world of crypto?" They would have looked at you cross-eyed. So it's anything that's just changing the way that we do finance, but more importantly, opening it up and reducing the friction from new customers to the unbanked to people that just want to find out, I guess, new things to do with their money and their all their possessions, really.
Yeah, Alex, to that point of, mentioning that all things aren't completely decentralized, I think this is one thing that's going to eventually push the term DeFi or decentralized finance into what you used, which was open finance. I kind of prefer the term too. The reason I use DeFi is it's probably more recognized by most people right now, which is it's kind of a negative trend in this case if we want to get people using the term open finance. But I think you bring up a very good point in this case that there's kind of a spectrum that we live on. It's been around for a while in what people generally call DeFi. We have applications that are completely decentralized that usually are very over collateralized. And then along with that, you have the other end in this case where there can be over collateralization. And there may be even some of the same elements of DeFi, but they usually have centralized counterparts. And as we've kind of talked about and stuff, there's the difference in lending pools between the compounds and the Aaves of the world, which are on the decentralized end, and also the Celsiuses, the Nexos, and the BlockFis of the world that are more centralized. So that's always very important. I think for anyone to just get involved in DeFi, to understand that it is a spectrum and it is a forever changing and widening spectrum. But I wanted to go ahead and dive in a little bit into some of like the trends that we're seeing in DeFi. And I think the biggest one, Alex, is obviously what we've seen over the past few weeks and really over the past few months, which is automated market makers like Uniswap, or basically what would be more familiar with most people as labeled as being as a decentralized exchange. So I want to go ahead, just kind of like, let's talk about this journey of Uniswap, because I know I dabbled with Uniswap back in like 2018, a little bit in 2019, just kind of following the project. And it's amazing to see where it's come over the last few months in the sense of the boost in liquidity and the volume on AMMs, now passing Coinbase Pro.
Yeah, I think if you rewind to back when we used to struggle to use iDex and the very first dexes, and it was sort of 2 clicks, and people couldn't wrap their head around that they were depositing into a smart contract and they had to wait for the confirmation. And then there was the second time. And if you keep pressing that button, it's just like loading up more and more ETH transactions when gas was expensive back then, which is nothing to how expensive it is now. But that sort of changed when we first had these interfaces that, I guess, combined those orders for people and got liquidity for them a little bit in an easier fashion than a IDEX of the world. But that still was very early on, that early version of Uniswap, and there wasn't a lot of liquidity, so you couldn't do big orders, and there wasn't a lot of coins. But then I think as people got familiar with how to use, say, MetaMask, and once you're very comfortable with that idea that you've got an Ethereum wallet in your browser, or that you can connect your ledger to that, and I mean that, I guess that capability wasn't even around, say, a year or two ago. So all of a sudden, you've got a lot more people that are now comfortable with doing that. A lot of the whales have very much got more, I guess, faith in this sort of stuff. So they're comfortable with putting in large liquidity. And then you've got that nice, easy Uniswap interface where it's just, hey, swap coin A to coin B and click OK. You don't even have to type in prices and limit orders like those other exchanges. So on one hand, it's kind of harder technically and it scares beginners. But on the other hand, there's no signing up, waiting for deposits, waiting for approval, typing in that limit order. So it's broken down those barriers. And now we've just got, I guess, the explosion of competition with people trying to reduce fees or get liquidity over here, and different experimentations in governance and what is going to work. But I think that's probably how I described that journey over the past 12 months. And look, further on, I see it really changing again from people like Uniswap that have the power over centralized exchanges at the moment, and they will be forced to change their business model.
That's one thing that I really picked up, Alex, like over this last week as things have gotten more and more insane and we've seen the trading volume starting to surpass on Uniswap comparative to Coinbase's total volume on a daily basis, as well as probably some of the other major exchanges like Kraken. The thing that I take away from it is you can start to see the listing process changing. And you can see how Binance is like basically right after you start to see it trending on Dexus, they're now starting to list a lot of these projects. I think whether or not they want to or not, or whether it meets their full vetting process, they know it's what traders want. And it tends to be that even by the time they get it out there, it's too late. We were just talking before about, and I do want to dive into it a little bit, the kind of craze around Sushi Swap and all these phenomena on top of Uniswap as a protocol. But it's amazing how it has changed the game here for traditional centralized exchanges. And the benefits here, I think, are so amazing. That's what I want to talk about first, that I think, these benefits have started to compound and become more clear, Alex. Like the thing that I realized, just today, for example, many exchanges were down this afternoon. We had Binance, for example, having a technical shutdown on their backend servers. And, Binance as an exchange does a great job a lot of the time, but this was something that, basically shut out a lot of traders from being able to make trades. And the thing that's fascinating about Uniswap is that even though it's not on layer 2 and doesn't have low fees, even with the high fees, Uniswap is always running. There is no kind of shutting it down because it is operating not only in a very simple architecture, but it's on the Ethereum network, which as a supercomputer is never down. So there is no kind of technical infrastructure where, for like a Coinbase, for example, you need about 500 employees to keep it running. And Uniswap has about 6 to 8 team members, and now they're looking to slightly higher now that they've surpassed Coinbase in volume.
Yeah, I think one thing I want people to understand is that at the end of the day, what we're building is just protocols and sets of rules, and then anyone can build like a front end and an interface on top of that. And the way that crypto has disrupted banks and traditional finance, centralized exchanges are just a stepping stone. So they are obviously not decentralized. And what we've started to see, but where it's going to go in future is it's going to get to the point, particularly once we scale, and we'll get into Ethereum scaling, I'm sure, in a second as well, that people won't even recognize the difference, and they'll just be interacting and they'll just be trading on their phone or whatever app it is at the time directly from their wallet. But underlying all that is going to be the protocols that never close down, that world computer, that decentralized nature. And like you just described, that means no downtime. Last week, we had a Deribit, the options platform, crash for quite a while. And you've got all these decentralized options protocols that are springing up. So all these things they're going to replace them eventually. And that's where these exchanges have got to now say to themselves, well, how can I compete? How can we serve our customers, our users, and give them something that they can't get from the DEXs? And at the moment, the DEXs are beating them because they can list anything. Now, a little bit like the ICO fad, that comes with a lot of scams and a lot of other, I guess, things that you've got to avoid in that space. But it's also really good. And Binance and these guys are now almost desperate. like FTX have been really good at listing the best projects very quickly, and now Binance want to get on board. They don't want to miss out on that volume, and they're almost sort of like vetting it. So I don't expect them to list any of the straight up scams, which it's kind of a positive. It's a little bit like when we went from ICO to IEO. I mean, it's a little bit of a step in the right direction, and you'd expect them to do some of the work for you. But at the end of the day, I think it's actually really interesting to watch what FTX have done, because recently they've launched Serum, which is a DEX, and they're an exchange. And their next IEO that they're launching is decentralized options, and they've already got options on their platform. So you ask yourself, well, why are they doing this? And I think they see the road in front of them, and it's a hybrid model, if not themselves going down the route of becoming a DAO and decentralizing, and maybe giving the FTT token, for example, governance powers. And that's another big theme that we've seen this year is, Kyber goes to a DAO, Synthetics goes to a DAO, and they kind of dissolve the company and give all the power over the token holders. And that way the SEC can't come door knocking or send them a letter or shut down a website, anything like that. And so that's kind of where I see this all going. And that's where Sushi is just that another example where they've said, let's issue this token, let's do the same exact model, but let's give the token holders power and governance, and they're going to get the fees instead of the VCs and all the early investors in Uniswap. So, yeah.
Yeah, absolutely. I can agree with you on that, Alex. I think it's amazing how we've gone from this kind of idea of decentralized exchanges being a fairy tale to where now it is basically becoming the standard in the sense of volume. Of course, I would say that it's not reached the scale of maybe if you take the combined volume of centralized exchanges. We are still a very small bubble in the sense of, where we need to really go. But it is getting to this point here where you're starting to see entire major companies, billion-dollar companies in the crypto space, having to adjust their business models. And even as you mentioned, considering something that probably a few months ago would have sounded crazy, the idea of them decentralizing and giving up central control, ditching traditional backend servers and systems that they usually used to operate for more decentralized architecture. And as you mentioned, Uniswap itself, as an interface is extremely simple. And I think that's actually probably given it such a benefit. But we're already seeing now, I've looked at, I think there's a few projects like Unilayer and a few others that are starting to add limit order functionality. And as you mentioned as well, Serum through FTX starting to add options and other types of derivatives in this case that will allow people to do all types of complex trades. And there's Opium Exchange as well, a few others doing the same thing. So I'm very interested, Alex. I think we're really on the cusp of the momentum. And I think there's probably been a lot of these projects building right now, but now they have an audience to reach to. They have the general trust of a new wave of traders and users who are looking for these opportunities. And it's going to be really exciting. So I wanted to go ahead and talk a little bit about Sushi in this case, because you brought it up. And just to talk about the general philosophy of what Sushi did. So for those who may not know, there's a really good website. There's a ton of resources for DeFi you can go on to, but one of the best for Uniswap is uniswap.info. And you can see how Uniswap had already been increasing its general supply of liquidity, basically the amount of ETH and ERC20 tokens and dollar value on the platform. And you can see that it was an already nice steady growth, but it just started to go vertical over the past week. And it was due to a new incentive program by basically granting tokens to liquidity providers for different pairs. And it shot liquidity up from around 300 million in a matter of a week all the way up to 1.9 billion at the peak. So Alex, as you were kind of hinting towards in that case, what did SushiSwap do in this case to specifically bring that incentive? For my understanding, it was basically granting a token to people providing specific liquidity pairs against Ether. And along with that as well, as it brings in this liquidity, you can stake Sushi. The price is speculative. It's going up and down. And it's really a matter of whether or not Sushi can keep that momentum as a project.
So the idea is for the first few weeks to give out the Sushi governance token to people that are providing liquidity, and then after that phase, they are going to basically have a clone, and SushiSwap will just look and feel like Uniswap. But the difference is that both liquidity providers on both platforms get a small percentage of the fees of all the trades. But the other chunk of those fees, instead of going to the early investors in Uniswap, that will go to all the holders of the Sushi token, like a dividend, basically. And it's a very similar model to what made Wi-Fi so popular. So basically, Wi-Fi, are you familiar with how they sort of created this automatic market maker where everyone can pull in their funds? And if you've got Tether or Ether, whatever coin you've got, it'll automatically find the highest return, whether that's in Uniswap or Balancer or Compound or Aave, it'll direct that for you. And the really cool feature is that all the governance token holders of the platform who have the Wi-Fi coin, they get that dividend. So once you start to get into these numbers of, $1 billion under management, 2 billion in Uniswap, or maybe Sushi take half of that and they've got a billion under management, these 0.3% or whatever the fees on Uniswap, all of a sudden the majority of that is now going to the holders. And the question just becomes, well, how much volume is this protocol going to do? And I've got an ownership over those cash flows, and you can start to say, well, what's the PE model and the cash flows, and work these things out. And someone did that the other day and showed the chart, and these things have got PEs of like 5, 10, 20 compared to some of these tech stocks, which have just got outrageous PEs. And these companies have got no debt or anything. So compared to what people are paying for these stocks in the I guess, Wall Street world, compared to how simple this business model is, how fast growing this space is, and how much you could possibly make from just owning this token, I think that's why we've seen outrageous growth.
Yeah, so to build on that, Alex, I guess that's a whole nother topic in of itself, as you mentioned, wire and finance, or Wi-Fi token, YFI. I know a lot of people have been, not only talking about the Wi-Fi token, but outside that as well. There's the copycats that are coming up that are offering different alternative business models, or, basically slight variations of it. It tends to be that if there's a successful project, there's going to be a few forks of it or different iterations. I'm curious to just get your take on Alex, because I really do trust your opinion on this. I've just been honestly very curious to hear whether or not, you're mentioning kind of taking traditional measurements here of like price to earnings ratios for a lot of these protocols. Do you feel that the kind of yields people are seeing right now, I think there was like YETH in this case was yielding like 90 something percent today when I last checked it. Do you think that those kind of yields are going to last forever in this space? Or do you think that they're going to correct relatively soon and that this will be more of a short-term phenomenon?
So those high yields a lot of the time are coming from layer upon layer of yield, and it's calculated from the governance token that you're getting as a reward. And a lot of the time you can then take the governance token and put it in another protocol, and then you'll get the fee rewards for adding that as liquidity. But then they've also got a bonus offer, like a launch special, you can think of it as. So they're giving you away their token as well. And then you might take that token and put it in synthetics, and they're giving away their token as well. So this is where you get layer upon layer of rewards, and you see these really high numbers. Or when there's a new protocol launched and there's a high demand for ETH and very few people doing it to begin with, that's when there's the higher yield on just something as simple as like the YETH. So deposit ETH, people want to borrow ETH. So once more and more people do it, it becomes a function of supply and demand, and the yield will come down because more and more people are trying to get it. But I think the natural yield in the world of crypto will always be, say, 5 to 8%, whereas in the real world, these yields are very close to zero. And then once you go on top of that, the risk becomes, well, is there smart contract risk? Is there liquidity risk? Is there a risk that the price could crash? So all those things they're going to add on to the yield that you're getting. And it's always a balance of risk versus reward. So yes, they're temporary at the moment. They're being subsidized with these tokens a lot of the time, but it's also because of how early on we are. And I think that further on down the road, I think that, there's going to be a lot of money, like trillions of dollars, that can either get 0% or negative yields, or get, if it's 5%, they're going to flood the market, and it might bring it all the way down to 1 or 2%, but it's always going to be higher than the traditional world.
Yeah, Alex, I think you have a great view on that. And you understand something that a lot of people don't, that I haven't really seen mentioned, is the thing I'm always curious about when I see yields like this is I don't rub it off as a scam. I'm kind of like, okay, it's happening on chain. How are they doing this? And as you mentioned, I think in the case of the YETH, in the case of Urine Finance, the way that you're actually earning that is they're basically going off of the subsidy from the Curve Finance token. And that was basically, at least from the visualization I'd seen earlier today that explained it, it made sense to me. I was like, okay, so this is the most effective route in this case to get extra ETH in this case and basically earn basically double your ETH by the end of the year. Now, but again, these are variable rates. It's very important, I think, for any of you guys listening. That's the key point here, is that these rates are variable. And as Alex, as you mentioned, one thing that I think is very important that we're not considering right now is the liquidity risk in this case, and the potential in this case, if price were to decline steadily, how people are, in a sense, effectively in some of these protocols to get some of these yields, taking almost kind of a margin position, or they're taking excessive risk for a steady price decline, just like you would if you're taking like a maker CDP in this case. There's going to be some risk associated where if price drops too much, you can have a liquidation event. But I think, man, it is, I gotta admit, even though I've been kind of separate from the crazy yield chasing kind of returns for crypto, I've been more of the kind of type that, gets interested in platforms like Celsius that, pay the rates you mentioned, around like anywhere from 3, 5, 7 to 10%, depending if you're talking about stable coins or Ethereum or Bitcoin. I still think it is very interesting to see, and to see how people are trying to kind of manipulate and toy around with some of these DeFi protocols and chase some form of yield in the long run.
Yeah, I'd probably just add that we haven't spoken a lot about the scams today. So in
Mm-hmm.
terms of that spectrum of something like Wi-Fi, where I really like the concept, or Sushi, where I think it's interesting to see if they can challenge Uniswap. Then we've got all these others that are just either trying to copy a basic lending platform, or they're not doing anything. Like Yams are just saying, hey, deposit some liquidity here and we'll give you Yams tokens, and this is a governance token, and you guys can decide to do this, that, or the other in future. But then you've got, you know, spaghetti and what is it, hot dogs today, and it just gets a little bit crazy. So you've got to say, well, what's the reality of, can all these teams be good? And if they're offering these higher and higher yields, it's normally because they're more and more desperate for the funds, sort of thing. So yeah, there's a lot of these that aren't going to work out, but that's why you've got to sift through and try and find the good ones. The other part of this space that I think is important, and at the start of the year, I'm not sure if you saw where I was tweeting about Nexus Mutual and saying that, hey, insurance in this world where there's like hacks every second day is so important, so awesome. This is just something that I am so bullish on, and now everyone is catching on to that. And we saw the Yearn finance system, the Wi-Fi token, say that they are going to integrate insurance, and everyone was scared that they were going to be competition for Nexus Mutual. And then yesterday they said, no, we're all partnering with Nexus Mutual. We're going to use them as almost like the underwriter, and we're going to like tokenize insurance and do it without KYC. So this is a project that, again, you can have a very simple valuation and say, well, currently it's like 1% of, if that, of all DeFi funds are insured. So what number is that going to get to? Is it 10%? Is it 50%? I don't know. And not only that, crypto DeFi is growing at like 1,000% month over month at the moment. So it becomes a question of, hey, if this continues to grow and more things get insured, then the market cap and the potential for this token is very, very high. So yeah, I sound like I've shielded that a fair bit there, and I probably wouldn't encourage people to go chasing things that have already had a huge run. Do all your own research there. If we get a big pullback, that's one that I might try and buy some more of. But I think that's a very easy to understand concept and a very important thing that the space was missing.
I completely agree with you, Alex. Nexus is a good company, and as you mentioned, it was interesting to see, with Yearn basically constantly moving into new fields and offering new services. It was interesting to see the move where they just decided to integrate Nexus as a project. I got an interesting kind of kick at it, but it doesn't surprise me at all, because Nexus has been around since back, if I'm correct, back in 2018. These players have been kind of building for this moment here. We're finally at the momentum curve where they get some people being able to test it. There's a real need now to have insurance on these smart contracts, because people are putting in not just a little bit of funny money here and there, it's substantial liquidity. And
Yeah.
especially if you're going to be doing anything like what people are doing now with yield farming, it's going to be very important.
Yeah, no, so I should clear up because Nexus, there's two projects. So Nexus is another old project that I like from 2018. This one is quite new, and it's called Nexus Mutual. So I
Yeah,
should
Nexus
clarify
Mutual.
that for people.
Yes,
Sorry, yeah.
that is true. Yeah, I'm sorry. I tend to sometimes abbreviate too much or simplify. But yes, Nexus Mutual, and specifically as you defined, Alex, in this case, their whole goal is basically around being able to have some kind of insurance policy. You can put ETH aside to basically cover yourself in case of some kind of mass hack or liquidation of it, or some kind of issue with the smart contract, maybe a bug or something that
Yeah.
someone breached it. So anyways, but yeah, and I think, I mean, this is really interesting, Alex. The last thing I wanted to talk to you about, you mentioned one exciting development for me personally, and that was, I think Aave is a token. I'm very curious about how it's been able to grow so fast. But the one thing is, I know Stani and stuff. I think Aave is a decent protocol. The one thing I really like about what they're doing is they're exploring a lot of different avenues. And as you mentioned, they're working with Realty, or basically a company that's working on tokenizing properties from the real world and using that as collateral. So starting to step out of just the world of over collateralized crypto loans, we can actually, we're still going to probably be collateralizing these to a pretty high degree, but being able to bring in those real world assets. And I think this brings in a really interesting debate because some people took a big offense to this, that we started to step into using real world assets outside of just
Yeah.
crypto. Not to say that crypto isn't a real world asset, but things that reside in the real world and reside in the trust, in this case being tokenized and having some sense of authority. And there's some people as well who really cheered on as well. So I'm curious to get your take, man. Like, as we're having this awesome conversation, do you really see this as a positive step? Because from my general take, just to give a quick summary, I generally think this is kind of the necessary step for DeFi to take it out of what could possibly be in the crypto space, maybe a couple $100 billion market with how crypto could grow over the next few years, or how could ETH grow as well. But I think it's going to be what's going to take us to a multi-trillion-dollar market. Is, I think, you view it very big picture, like myself, in the kind of macro perspective.
Yeah, absolutely. So there's two aspects of this that I want to discuss. So the first is that, going back to what we said at the start of the show, is it open finance or is it decentralized finance? And having a tokenized property requires like a security deed. You've got to prove ownership, and Realty are a security token platform. So you've got to upload the documents, and you can't just say, yeah, I've got a house and click on MetaMask sort of thing. So that's something that, yes, people have to get their head around and just accept. Now, we've already had people that have tokenized their cars, shoes and song rights, all sorts of things in the real world to collateralize those. But that is a proper security token, and that is a centralized company that is approving that. So then you've got to get the oracles to verify, and you're putting trust in one person. So look, I completely agree that is how we go to a multi-trillion-dollar market, and it opens up. Just think about what's possible if every house, every ounce of gold in the ground was commoditized, and that the sort of money and funding and liquidity you can pull forward and fund different ideas and different people that can't normally get it in regional Africa or whatever. Forget having to go to a bank and get the debt denominated in US dollars and beg the government to build a gold mine. Like, the people of that village could tokenize that gold and get funding and do revenue streams. Like, the possibilities are just mind-blowing once you've got this stuff in place. Then at the other end of the spectrum, you've got the true cypherpunks and the decentralized ideology of, we shouldn't even let Tether be part of these decentralized systems, or USDC, because we're relying still on a company and they're relying on a bank. And Realty, if that house, something happens to it, it burns down, there's a fight over the ownership in a certain country that had tokenized it, that can bring down the DeFi system, the world that's completely digital, because we're starting to trust assets that are outside of our control. So I completely understand both ideologies and why some people only want Ethereum or Bitcoin or decentralized stablecoins being able to be used in the world of DeFi and collateral. So they're the kind of two arguments. Again, it's a scale, and it's about, where does your philosophy fit on that scale?
Yeah, exactly. I think what it's going to be at the end of the end of the day, the great thing about it, and I could see there being an argument in this case that if there's overlap, it could cause systematic risk to people who are just maybe using crypto, or basically trustless assets in this case. But putting that aside, right? Maybe applications can build around that. They can build separate protocols that can interact, but maybe have different philosophies of how they collateralize things. I think it's a matter of, at the end of the day, use what you want to use. If you don't like Aave for tapping into real world assets, there's Compound. There's going to be a dozen different copycat, DeFi protocols that do the exact same thing. Maybe they do it better in certain ways, and maybe they don't decide to utilize assets outside of the worlds, of crypto. And I think that that's a really beautiful thing. Then it's like, we're going to get all kinds of different options. And I think, again, whether or not you want to be a part of that kind of cypherpunk crypto market that probably won't reach to any more than a few $100 billion, that's fine. You can go participate in that. But there's also this world where we're bringing in the real world into the digital world. And I think, one thing, Alex, I'm just super excited about, and I still always get kind of goosebumps thinking about it, because I was so happy to hear you talking about this, because I was trying to think of a way to kind of contextualize it a while ago, is the digital thick shake theory that you come up
Yeah.
with. That was the
Yeah.
reiteration of the dollar milkshake theory. And this idea, man, that we're going to get to a point here in the next few years where, this idea of bringing in stablecoin liquidity into the space in mass amounts and just expanding DeFi to a level that I don't think we can even imagine right now. We don't know what it's going to look like. It's going to be
Mm.
fascinating. And the kind of yield that that's going to bring as well for people is going to be phenomenal.
Yeah, and I've been thinking about it even more with the US dollar's obviously been a little bit weaker lately, and I've been thinking about the idea of everyone having a smartphone and access to a stable coin, and whether or not that is good or bad for the dollar. Does that increase demand, or does that actually just increase supply because everyone can issue, say, DAI stable coins or synthetic USD with any form of collateral? So if that's sort of the most used currency and everyone is out there minting these digital dollars, or is it, as I said, everyone can now access dollars and they don't have to go through the bank? So that's really interesting. I haven't made my mind up yet, but either way, it's again opening the world of finance.
Precisely, yeah. I think in that case, if we're to talk on like a trader's perspective, I think the increased supply, basically allowing anyone to become a central bank or the equivalent of a commercial bank doing fractional lending, just basically being able to use any type of asset in this case, on the fly, just like that, and being able to generate some form of stable coin like DAI. I think it's really going to be a pretty big challenge if DAI actually exists and continues to go through as an asset. Or other stable coins alike. I know there's other ones now. There's Kava's USDX. There's also Bida. There's all these new plays coming out that are doing something similar. But man, above all, I mean, it's going to be fascinating to see. It's going to be a real opportunity to give people that opportunity. I know, for example, with a Digifox and stuff, we've been continuing to kind of push this narrative of stable coins, but we still use USDC. I think right now, it would be difficult for me to kind of promote something like DAI because the branding's a bit confusing, but outside of that as well, as you mentioned, Alex, like it's very early on, I think, in this process. And we have to see if that world of, utilizing, I guess, well, now that, makers starting to explore different types of assets, but to see if DAI is going to be the standard in the long run, I think is an interesting question.
And if you get 1 million downloads for Digifox, do you have to fully KYC people to be able to use USDC?
No, so there's actually no requirement because so basically it's a self-custodial wallet. Digifox never touches the user's funds. Now, if you interact with something maybe like Celsius, and this is again to speak to that point, you're dealing with a spectrum of services. So if you're interacting with Compound, if you're interacting with Uniswap, there's no need for KYC in this case. I don't know if that's going to change in the future. I've met some people who believe that even though these are decentralized services, the regulators are going to, crunch down basically on teams or basically some kind of central component, people who are building the applications. Again, we'll always make sure to follow the rules. In this case, we have to as a company. But right now, there's a ton of services, most of DeFi, that you can access without KYC. The only one in this case is Celsius right now, or if you use a traditional fiat on-ramp.
That's really interesting thought experiment. And I've heard rumors that, yeah, they crack down on those, well, more so exchanges, or they'd force exchanges to whitelist addresses and that kind of thing. But I think that's why so many teams are now in a hurry to get to the DAO decentralized model so they can't get shut down. But no, yeah, that's really interesting that at what point do they draw the line? Like if you were to have 1 billion downloads and everyone was demanding USDC, at what point do the regulators say, hold on, like there's 100 million people in Russia or China now that are getting US dollars, and it's that they're the proper pegged dollars. These aren't just funny money. So yeah, that's a really interesting thought experiment about where they're going to draw the line if this becomes a really, really popular way to get dollars between countries.
Yeah, I think, Alex, I've thought about that a good amount. One thing I would say right off the bat that comes to mind was when we were watching Libra. It was real interesting to see a Congress, a governance body in the United States who doesn't seem to be very tech savvy whatsoever, who doesn't seem to be too engaged in what's going on in fintech, all of a sudden really starting to care about something that might have some substantial mass that doesn't just include the dollar or US treasuries. And that was the thing that just basically opened up the conclusion for me that they don't really care in this case about what Libra could have done bad or what could have done for criminals or this or that, or what Facebook could have done, in the sense of maybe respecting or not respecting data privacy users. It was a direct challenge to the dollar in this case and starting to build new currency models on mass scale. So I think that they're not going to have any problem with stablecoins. I mean, we've seen, sure, there's been the issue with Tether in New York. But outside of that, I mean, USDC has been chugging along well. It's formulated by one of the more reputable companies in the space, Coinbase. It's been around for a long period of time. So yeah, I'm interested to see what that transition is, Alex. I do hope for a future, whether there are some positives or negatives, I do hope for that future where, decentralized cryptocurrencies that are censorship resistant, like cash, would be phenomenal. I think it would be the best way to go in the long run. And doing everything we can in a trust minimized way is the best option, so long as it's still convenient for the user. But I don't know. I don't know if we'll get to that point for a while. We'll see.
Yeah, and I don't know if you want to like segue a little bit into any other topics, but I think what we've seen just really recently is almost the gamification of some of these. So some of the newer protocols that I've seen coming out are turning finance into like literally a game, or like these cartoon interfaces, which people will see soon as these things release publicly. But yeah, it's like the melding of the gaming world, which I'm really excited about, and the world of DeFi. So people don't, it's going to like almost educate people on finance, which they didn't get at school, through like a game, which I'm really excited about as well.
Yeah, I know, Alex, you've been talking a lot about kind of like gaming applications. And I think, again, that's a very kind of forward looking view in this case about, I mean, we've already kind of seen it. It just takes something like we were talking about, like Sushi Swap earlier, right? It's cartoony, it's very simple. The whole process kind of walks you through it. But I think in this case, this point about kind of like games, I mean, I'm curious, like, could you give like an example in this case? I don't know if you can talk too much. Maybe these are projects like, that are still kind of undisclosed and stuff, but I mean, what's a good example you can see that just maybe would visualize it for people, that we're bringing in this world of DeFi into something that's more gamified, where maybe there's tokenization of assets, but also maybe incentive systems that walk you through some of the basics of finance?
Yeah, none that are publicly available yet, or that I can talk about it at this point. But I think it's almost like picture it like a kid's. If you were to try and teach someone in primary school about like dropping and dragging your money from the bank, into like a piggy bank that has a high interest rate, and so it's just going to have these really user friendly interfaces. It'll Once you connect all these things all to your Ethereum address, there's these apps like Sablia, where it tells you can like see your
Oh
wages
yeah.
streaming in real time. So where I picture that this is going is, you can have all your income coming in from your wages, and then you might see that your expenses are going backwards, and you might say, well, hold on, I can't afford the car and the mortgage and my student debt. And that's where people in the real world get that credit card bill once a quarter and go, oh man, and then they get a power bill and I'm so far behind, how did this happen? But in this future world where we're going with everything, with these gaming sort of cartoon interfaces, you'll be able to see in real time whether your streaming wages and expenses that are coming out are growing or going backwards, and you're in trouble. Yeah.
Yeah, Sabler, I've been following the project for a while, and I think something like that would be very valuable. I mean, I don't want to pivot off too much and stuff, but I think with something like that would be very valuable. There was a niche use case in a lot of developing regions of the world where I went to Paraguay back in December 2019, and basically, one of the things that I'd heard when I was there is that a lot of people have issue with getting paid properly. So everything's cash based, but sometimes, for example, you could be working on a farm making the equivalent of $300, 300 US dollars a month. And it could be that the farmer just decides to pay you $100, and you have no way of fighting it in the legal system. You have no way of kind of stepping back against it. And I thought about not only having something on chain, which would be provable, but also something like Sabler, where you can basically have it sign in a contract where, so long as you're working in this case, you can see your payment increment over time. And I thought that was very
Yeah.
fascinating. But I could see you could gamify that. It's very true, Alex, like being able to gamify it in very simple ways. And just again, I mean, we're just on the cusp of DeFi. I mean, this is going to get more and more crazy.
Even like portfolio construction, dropping and dragging from shares to bonds, and then you can see how that would change your stream of income through dividend payments or going into the world of DeFi and yield. So I'm really excited about that. And there's a little project that I've been talking about a bit recently called Red Fox, which is not to be confused with DigiFox. But one of the things they're doing in Southeast Asia is really trying to roll out, as you say, these almost gamification and reward system and payments, but banking the unbanked at the same time in these regions where it's really fast growing. A lot of them love games. It's just sort of getting into this digital e-commerce in those parts of the world, and so all these companies want to get these new customers and entice them in with incentives. So yeah, there's a lot of things happening around the world. And Misago are trying to do similar things. Yeah, I just can't wait to see where the next billion or 2 billion users are going to come from, and they're not going to be from America and speculating on BitMEX. It's going to be very different, and I think that's going to surprise a lot of people.
I completely agree, man. It's going to be another region of the world where it's probably much more relevant. And who knows, maybe we'll have our Pokemon Go version of something along those lines in DeFi. I mean, that would be something, wouldn't it? Like just to see an absolute acceleration that, I mean, a real killer application, even far beyond what we've seen with Uniswap and Compound. And there's still this very small niche world, I think, of what we've seen in crypto so far. But
Yeah,
Alex,
and I was just
yeah,
going to say, just even bringing people into Decentraland, you've seen that I've been like, I went to the World Stablecoin Summit in Decentraland the other day, and the things that are possible there, where you could gamify actual games or just the land itself. And man, oh man, have you had to wander around Decentraland yet?
no, I actually haven't gotten to try it yet. I do follow a lot of like, originally when I think Decentraland had intentions to do virtual reality and stuff, I used to follow them a lot back in the day and stuff. But I've got to check it out because I know that they had a major kind of lift up on the protocol and the design and everything. And also just the general idea. I mean, to me, it was always kind of foreign. Again, it was like digital assets in games where I was like, I used to play Counter-Strike and a few other games. I was like, who
Yeah.
would pay for like a skin or this or that? But it really started to make sense to me and stuff when you have like a limitation and it's almost kind of collectible land. So I've got to check it out though. That sounds really interesting.
Yeah, I definitely think that. Well, I know for a fact that there's a lot of big companies that are getting involved with Decentraland, so I'm excited for that. Yeah.
Good stuff, man. Well, I got to take a look through it and I'll look through the conference that they just did virtually. But Alex, I mean, this has just been a phenomenal conversation. It's always really interesting to get your perspective. And what I got to say, man, I really do appreciate you as a friend in the space. Like, I constantly see that you're always like not getting caught in the noise. You can kind of see it for what it is, and you're always looking ahead to focus on kind of like what's right around the corner in this case. What are we not really seeing right now? And I guess again, from one macro trader to another, I think we can we can relate on that kind of mindset.
Absolutely. And yeah, well done, mate, on everything that you've been doing lately as well. Like, I know the crypto space has changed, hasn't it? From back in 2017 when it was educating people on Bitcoin and these other protocols to now it's like you've got to pick your field. Like, if you can't be across gaming and DeFi and then building like something like DigiFox, and then there's people that are just doing these completely other foreign concepts and pushing boundaries. It's got to the point now where there is so much happening, you can't be across everything, and that's why it's good to catch up.
Yeah, absolutely, man. That's so true. I mean, I think there's, right now I'm balancing 3 or 4 different things and stuff. And it's nice to kind of sit down and stuff and gain another perspective with, what other people are doing and everything. But I mean, yeah, I mean, too much to keep up with, man. And just to think
Awesome.
we're in the early stages of it. So, I mean, Alex, this has been a great conversation. And just again, well, I guess we're going to be putting the video up on both channels and stuff. But either way, guys, whether you're a viewer of my channel or a viewer of Alex's, definitely check either of our channels out and stuff. Definitely check us out on socials. Alex is always posting great stuff on Twitter, a lot of gems there and stuff. And outside as well, I try to kind of break down DeFi a bit and just kind of cover what's going on in traditional markets alongside Alex. So,
Absolutely.
Alex,
And
man, it was
I'll put all Nick's stuff down below as well for my audience. So that's been awesome, Nick. Loved catching up.
absolutely, Alex. Take care, man.
See you guys.